Good morning. Bombardier shares dropped below $1 last week, their lowest level in 25 years. Here to explain what this all means is David Baskin. He's the founder of Baskin Wealth Management. Good morning, David.
Good morning, Meg.
What are we to make of Bombardier's troubles?
The problem is not so much the share price, in my view, as the fact that the company has burned through all of its shareholder equity and has a massive amount of debt. Bombardier basically bet the company on the CS series of jet aircraft. They spent an enormous amount of money, much more than they expected, and took much longer to get the plane developed than they expected. And the result of that is that all of the accumulated shareholders' equity from the time the company was founded till now has been dissipated. There is no shareholders' equity. There's a mountain of debt. Much of that debt has to be rolled over in the next 2 to 5 years. And in my view, it's very questionable as to whether people will be willing to roll over that debt. The company is really at risk of insolvency, Meg. More than just being delisted from the TSX, there's a real question of its ability to continue as a going concern.
David, what happened to Bombardier's technical edge?
Meg, this is one of the saddest things about the whole saga, because when the CS series was conceived, it was going to be a quieter jet than Airbus or Boeing could produce and a more fuel-efficient plane than they could produce. But because of the long delays that have taken place, both Airbus and Boeing have caught up and now have quiet, fuel-efficient jets of a similar size that they can offer in the market. So in a real sense, Bombardier, because it took so long and spent so much money, lost its technology edge. And in some ways, it's a similar story to BlackBerry losing its technological edge to Apple and Samsung.
Is there a way to fix this?
What needs to happen is a reorganization of the company. And if we look at what happened with the big U.S. automotive manufacturers in the wake of 2008, really three things happened. The shareholders took a big haircut, the debt holders took a big haircut, and the unions were forced to take a haircut. And I think that's really what needs to happen here. I would envisage some sort of a write-off of debt, a swap of debt into equity. That would have the effect, by the way, of displacing the family control of this company. Certainly, if I were the government and I were being asked to put money in as part of this, I would expect the unions to take a haircut as well.
Would you consider it in the same league as American banks, as in too big to fail?
No, it's clearly not too big to fail. It's an industrial company. It employs a lot of people in very well-paid industrial jobs in Quebec, but it's not too big to fail. It doesn't have any structural impact on the Canadian economy or on the world economy. It's a fairly minor aircraft manufacturing company in the world context. So there's no systemic risk involved in letting the company go.
If you and I were to talk a year from now about this, what will we be talking about?
Well, that's the most interesting question of all. Here's the other part of the risk, I think, that needs to be considered to answer that question. Bombardier has around 250 orders for the CS series aircraft, and if you're one of the airlines ordering those planes, the question you would ask yourself is, do I want to order a fleet of planes from a company that might not exist to provide maintenance and support and parts 5 years from now? And if you came to the conclusion that Bombardier is at risk of failing, then those 250 orders could all go away. So much worse than simply not getting any new orders, which has been the case, the existing orders could dry up, in which case the CS would never really go into production at all.
David, thank you so much for your insights today. This has been really interesting. I appreciate it.
Well, thank you, Meg. It's my pleasure.
David Baskin is the founder of Baskin Wealth Management. For the CBC Radio 1 Business Desk, I'm Meagan Reed.